Let's pick up on the markets now, and local trade poised for another positive day of trade. Well, after the JSE closing marginally firmer and the rand, little changes there. Market focus remains on inflation and more interest rate hikes and the global recession as the second half of the year begins. Director at Sanlam Private Wealth is Greg Katzenellenbogen, and he joins us now for a quick market update. Greg, good morning to you, and thank you for your time. Your quick overview of how the markets are faring in early trade.
Well, the markets this morning are pretty flat, in and out of the red, but very, very little trade at the moment. I think what will drive trade over the next few days will be what happens with U.S. interest rates. Will they hike again, as the Federal Reserve has indicated they'll do? That's the one thing driving the markets. And then the market has been expecting now for the last couple of weeks some new stimulus measures out of China. That hasn't come through yet, but the market believes that the Chinese will have no option but to try and stimulate the economy. So it won't be just a free-for-all in terms of spraying money at the economy, but what they call targeted. But I think the market is quite interested to see what relief that the Chinese will offer to their embattled property market, which is beset by massive amounts of debt from property developers. In the past, in China, people were speculating a lot in property, and as long as the mortgage rate or the rate of growth on what you could sell your property was exceeding the mortgage rate, people were happy to do that. Now, of course, prices have fallen below the mortgage rate, and that's caused the Chinese significant amount of problems in that property market. But in the US as well, yesterday the PMI data came out and showing that US manufacturing had declined again. So I'm not quite sure that, you've seen inflation start to come down a little, and that has indicated that maybe the Fed will continue going on hold. But Mr. Powell seems not to want to. He wants to send a very tough message to the market, and I'm almost convinced that they want to see actually a fall in that US S&P in the stock market before they'll think that they've got inflation under control. So it's going to be quite a difficult time for investors over the next few months, but one mustn't be put off by the fact that, there's a lot of talk of recession and you've got inverted yield curves, but the US economy is still in a very, very good state.
Yeah, looks like it's going to be a very interesting period to look forward to, Greg. Let's look at commodities. Gold prices also flat, as you've already mentioned. In early trade, as the traders await the U.S. Fed minutes on those clues that you've already touched on, interest rates, for example. Talk us through those developments.
Yeah, well, the gold price, the primary driver of the gold price is real interest rates. And as you've seen, as interest rates have risen dramatically, 5 full percentage points over the last year and a bit, interest rates have gone from deeply negative, the real yield, to a positive real yield, and that's not great for gold. But the fact that the US Fed went on pause in the last rate hike opportunity they had gave the gold price a little bit of a boost. But if interest rates continue to rise, it will keep the gold price under pressure. But if the US is coming to us to when the Federal Reserve can go on hold without actually cutting rates, but the fact that they would go on hold would be taken as a positive sign for the market that, finally the Fed is indicating that they are allowing the lag effect in interest rates to have some effect on the economy, because generally when you raise interest rates, it takes a while for that effect to come through to the economy, and they haven't really given it enough time, in my view. But they're so concerned about slaying the inflation dragon that I'm concerned that they might tip the whole thing off a cliff, that economy eventually. But gold will benefit. But if the US Federal Reserve does go on hold because it's unlikely that they will start cutting rates anytime soon. But going on hold could give the gold price a further boost.
Let's talk company news. British American Tobacco publishing its quarterly dividends for the year which ended on the 31st of December 2022. Help us make sense of their numbers.
No, so what they do is they declare in February, they declare a dividend for the year, and then they tell you they will pay you that dividend in four installments. And the next installment is due now in August. It's about 13 odd rand. I see they took an exchange rate of just under 24 to the pound. So for those people who are holding, that's about 13 odd rand. But after you pay South Africa's 20% dividend tax, the shareholders will coming out with about 11 rand. But that's all that the announcement was, is just indicating the payment dates and the amount that it will be paying in this quarterly cycle of dividends.
Let's talk new vehicle sales. In June, the sentiment was we are upbeat despite South Africa's overwhelmingly negative economic climate. What does this data tell us about the state of the vehicle industry, Greg, and in particular customer appetite for cars?
Well, you know, South Africans have a love affair with vehicles. We just love vehicles and we like changing them, and then the motor manufacturers help us by bringing new models in all the time. But I think the key takeaway from this is that it was driven primarily, so if you look at June 2022, the amount of new passenger vehicles sold was only up by about 285, but there was a big jump in the car rental companies and car rentals. That was about 13% of sales, whereas in May the figure was driven a lot by exports because, as you know, a year earlier than that they had all the floods in KZN, so vehicle exports were restricted. But this time exports in June were actually down somewhat, a few percentage points. So the primary drivers were car rentals and then light commercial vehicles and bakkies and things like that. So the takeaway I think from this is that both the car rental companies are seeing that things are getting better, and although our Reserve Bank has indicated that they won't hesitate to raise rates in the future, I think that you'll probably see emerging market central banks start lowering rates before the Americans will do. And I think a lot of people are, first of all, in business are thinking that, you know, South Africa's economy is probably bottomed and we can only look forward to things getting better from here. And you've seen with load shedding as well that as the intensity of load shedding has eased, you're starting to see a much better, people are starting to feel a lot better about the economy. But I would say that the figures indicating that there was a lot of bakkies and light commercial vehicles indicate that business feels that maybe we've reached the bottom. So I think it's quite positive, the key takeaways we must take from vehicle sales.
Wonderful indeed. Well, let's hope that that positive sentiment around the economy, I think in particular the load shedding element, that is going to give us reasons to smile. Greg, let me thank you very much for your time. Greg Katzenellenbogen is a director at Sanlam Private Wealth.